budget is indeed presented. Vaibhav Sanghavi is with us, CEO at Ask Hedge Solutions. Vaibhav, good afternoon. Good to have you with us here. It's largely banks today, so give us a color on what you are doing at Ask Hedge, because the rest of the market isn't really pulling its weight today. It's purely banks.
Yeah, of course. I think Prashant, rightly observed that. But one interesting point I would, want to make here is that while today it is banks, yesterday was something different, and tomorrow is likely to be different as well. The point being that I am trying to say is basically from when we look at the benchmark indices, we are seeing pretty quick rotation in terms of these sectors, thereby lending good amount of support from to the benchmark indices from a shorter term movement perspective. While 23,500 looks to be kind of breached on the higher side, my sense is basically the momentum will is likely to continue and further accelerate, probably looking to churn in terms of the sectors as well. So we will hear about these kind of stories, about a particular sector in terms of why the interest is there on that particular day. But what we can only say is basically that the frontliners are now getting better attention, from a valuation differential perspective as compared to the mid caps at this point in time.
So Vaibhav, if the market continues to see a lot of churn, sectoral rotation in and out, how does one play it? What's the portfolio construct you would advise?
See, Rima, I think if you're trying to trade these markets, I think, and you keep on looking at the price and keep on rotating your sectors, then it's just futile. It's extremely important to kind of focus on what you like from a fundamental perspective. Keep holding on and just wait for that sector rotation to kind of get into your sectors or your stocks, when it comes by. So while the thesis is something there for a medium to longer term, my sense is basically it's just a matter of time. It will kind of catch up to your portfolio of stocks. So very tricky to kind of trade in and out on these kind of sectors, looking at just the momentum in terms of price movement.
So if you could then make it sector specific for us, what is it that you at Ask Hedge Solutions like as a house, and where do you find momentum which is tradable in the very near term, medium term and long term are the things that you like? Give us a sense.
So what we would probably here concentrate on, two larger themes. One is, of course, the upcoming budget. And we will eagerly wait for looking at the direction of the policy framework, in the sense that last 10 years has been, extremely laser focused on, supply side. We want to see that whether that continues or probably also or consumption gets some amount of attention as well from the budget perspective. While that is the case, our estimate is that the supply side focus will continue, the capex will continue. So we are bullish on overall capex industrials, capcos kind of segment. At the same time, we are starting to get pretty positive on IT sector as a whole. So that is something which we like. Some rural focused themes and tactically the private banks which may continue to trade higher, especially from the long side.
In IT, is it frontline IT or mid-cap IT? And what will be the driver of that?
I think our focus would largely be the frontline ITs at this point in time, because the bottoming out of the business story, I think, will attract a good amount of allocation to the frontline companies, where what we see is basically from both the foreign and the domestic investors. Both of them are underweight in terms of their portfolios. And when the business is kind of bottoming out, probably in a quarter or two, we'll start seeing those kind of results come about. But stocks will start moving in terms of the commentary, from these companies. So this quarter, probably we'll start to see that. And as one of the Accenture's commentary and the results actually showed that path as well. So we do think that in the initial part, it'll start with the frontliners and then probably trickle down over the mid caps, because there the valuations are a little expensive.
You said you're also playing the consumption theme. How are you playing that?
From consumption, if we look at is basically we have to be a little kind of tactical or probably when we talk about consumption, we may probably, differentiate between staples and discretionary. And in discretionary, at this point in time, we are largely focused on the durable segment. Whereas in case of the staples, we'll wait for the quarterly numbers, and the first half of the monsoon is also likely to be a little weak in terms of the forecast, which has already been there. So once the results are out, we see some amount of correction on these prices is where we would look to get into the staple segment. But otherwise, consumer durables is something which we are focused on at this point in time.
Rima, by the way, have you started getting expectations, IT? Just
No,
to go back to the...
not yet.
Not yet. But expectation is building, at least at frontline IT, perhaps we will start to see some
So, Q1 is typically a strong quarter for IT companies. So in that sense, you can expect numbers to be better than Q4. But I think, again, the street will, brace for commentary, right? Does the commentary indicate that things are picking up in the second half of the year? I don't think as of now in the Q1 numbers, based on what we've seen from Accenture and the likes, that you are going to see a meaningful pickup in the growth numbers. But order book needs to be strong. It's been strong for a very long time, order booking. So that needs to sustain, and I think commentary that things are on the mend. Maybe post-elections in the US, the client tap may open up.
Vaibhav, your call is not just based off of the first quarter numbers and what they may say, right, in terms of constant currency growth, etc. I mean, it's a slightly, the call is that things will turn in the second half.
Of course, I think it's not only about a quarter, first quarter. I think, of course, right, Rima did mention about the seasonality. Of course, we have seen that Q1 is largely stronger, but few things at play here. As I said, large under ownership, from all the investors. To the valuations, this is one sector apart from the private banks, which we have good amount of comfort in terms of the valuations. The cash flow yields are kind of pretty attractive. And in a light where you are not seeing any crash in terms of the global economy, plus the fear of artificial intelligence kind of cannibalizing the whole business, it's now over. In fact, it is trying to give you some good opportunity in terms of your order bookings. My sense is basically from an overall sector perspective, I think all the things are kind of getting in place. So that's a sector we would keenly watch on.
All right. Thank you so much for joining in. Insightful conversation here, Vaibhav. As we speak, the market is increasing its gains and it's improving its breadth as well. So we're seeing some more stocks add themselves to the gaining list. So the